A very good morning and a happy Thursday. Among all the crazy trading that's happening, the highlight for me was this. The Federal Reserve said that it would maintain its current monetary policies while acknowledging the economy has softened in the recent weeks. But the first question Jerome Powell fielded in his press conference was in fact about trading in GameStop. The YOLO crowd seemed to fully take over Wall Street. Apple, Facebook, Tesla results breakdown and the FOMC meeting. These are the three things that we will talk about. Undeterred by growing scrutiny, the YOLO crowd seemed to fully take over Wall Street on Wednesday. Day traders fueled by Reddit forums have taken a shine to several unloved stocks following their massive success with GameStop, and those trades produced significant gains in what was an otherwise downbeat type of day. Movie theatre chain AMC Entertainment was the biggest beneficiary, watching its stock skyrocket more than 300% on Wednesday to a level even before its pre-pandemic high. GameStop shares also surged again, bringing its value to $24 billion, more than 10 times what it was just 2 weeks ago. And the once mighty cell phone players, BlackBerry and Nokia, surged 43% and 38% for the day, respectively. The blue chip index, which is the Dow, fell about 2.1%, extending its losing streak to 5 sessions. The S&P 500 dropped 2.6%, and the Nasdaq Composite was also down 2.6%. On results, we'll talk about 3: Apple, Facebook, and Tesla. Apple finished 2020 with its most profitable quarter ever, fueled by uptick in higher-end iPhone sales and pandemic-induced surge in demand for its laptops and tablets. iPhone revenues rose about 17% to $65.6 billion in the December quarter. That growth was good, but was slower than in other parts of Apple's businesses, which helped boost its result in the recent quarter amid declining iPhone sales. So sales for the Mac lineup went up 21%, and for iPads it went up 41%, which all helped to generate these record results. Laptop sales were helped with the arrival of company's new in-house chip dubbed M1, according to Mr. Cook. Altogether, the company generated about $111 billion in quarterly sales, an all-time high. Profits rose 29% to $26.76 billion in the 3 months ended in December. On a per-share basis, Apple said it earned about $1.68, exceeding the $1.41 predicted by analysts in the FactSet survey. Mr. Cook said that we could not be more optimistic about the company's product lineup. Moving on to Facebook. Facebook posted record revenue and profit in the fourth quarter as online holiday shopping and increased use of company's platforms during the pandemic drove a surge in its ad business. Facebook posted revenue of $28.07 billion, up from $21.08 billion. Facebook's profits rose 52% to $11.22 billion or $3.88 a share. Both measures far exceeded analyst projections. Facebook cited European regulatory developments and anticipated ad targeting headwinds as serious threats. Facebook also said Wednesday that it was adding up to $25 billion to its existing stock buyback program. Shares in the company have lagged behind Nasdaq Composite Index over the past 3 months and fell in extended trading on Wednesday as well. An interesting point on the Facebook results is Facebook's foray into e-commerce could yield big benefits in the long run, is what analysts say. Instagram shopping and Reels along with Facebook Marketplace could be responsible for about $3 billion of additional revenue for the company this year. This is according to a recent note from Morgan Stanley. The note cited a survey that found about a third of Americans use shopping and Reels monthly, while more than half use Marketplace. Facebook also continued to grow its user base in the closing months of 2020. It ended the third quarter with about 1.82 billion daily users and about 2.74 billion monthly users. Moving on to Tesla. Tesla posted its first full year profit powered by record vehicle deliveries amid a global pandemic and growing demand for electric vehicles that's driving the company to pursue a sharp rise in output this year. The Silicon Valley car maker said Wednesday it expects to increase production by about 50% on average for the coming years and top that rate in 2021. Company delivered about 500,000 vehicles to customers last year, up by more than a third from the 2019 levels, even as worldwide auto sales plunged roughly 14%. Chief Executive Elon Musk last year suggested a delivery target of about 840 to 1 million vehicles in 2021. Wall Street's projection is for about 796 vehicles. Tesla reported a profit of 721 million on about 31.5 billion in sales, which compares with a 862 million loss and sales of about 24.6 billion in 2019. Tesla also said that its bottom line in the latest quarter was weighed down by a range of factors, including supply chain costs and preparations to introduce updated versions of its Model S luxury sedan and Model X sport utility vehicle. Tesla's financial results have been buoyed by the sale of regulatory credits to its rival automakers that need to comply with emission-related rules. So such credits bought in about 1.6 billion last year, up from about 594 million in 2019. Shares of the car maker slumped more than 6% in after-hours trading. Lastly, the FOMC, with the Federal Reserve holding its first monetary policy meeting of the year, it could be easy to attribute the day's dollar rally to central bank comments. However, nothing in Fed Chair Powell's Q&A session warranted any spike in dollar and losses in equities. A rally like the one we saw today in the greenback could normally be fueled by hawkish commentary. Instead, the changes to the FOMC statement were slightly more dovish. The central bank acknowledged the moderation in activity and employment in areas hit hardest by the pandemic and predicted modest inflation this year. This cautious outlook explains why Powell thinks it's too early to focus on tapering dates. He said they are still a long way from meeting inflation and employment goals, so when it's time to gradually taper, they'll just let us know well in advance. By avoiding any specific time frame on taper, today's comments could have driven the dollar lower and not higher, but I think the dollar was completely linked to what happened with the stocks. Stocks down, dollar up was the trade yesterday. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.